Hello, everybody. Um, Welcome to this week's podcast with IEA. I am Leon Noble. First, some disclaimers. So, as you can see, the quality you're seeing here isn't the usual quality you're used to seeing. Reason being is I'm doing this on my computer by myself. As you can see, Brent is not here. I'll cover that in a minute. But my computer doesn't have the best camera. And Brent usually handles all the video stuff. So just bear with me through this week's podcast, possibly next week too. And the reason why I'm here by myself is Brent is on his way to Ghana. I dropped him off at the airport a couple hours ago. He's going back there to oversee the construction of the wall that's going to go around the beachfront property that we purchased when we went there last week or 2 weeks ago. Awesome trip, damn near life changing trip. We accomplished a lot. We got the deed to the property that we bought. It's great. The next phase now is we have to actually build a wall around it, just so that we protect our property and no one kind of encroaches on it. So Brent is on his way there now to oversee that process. He'll probably be there about a week and a half, to oversee that. So that's why I'm by myself. That's why I'm doing this on my computer, and that's why the quality isn't as great. But the message is what matters. So that's a little synopsis on the Ghana trip. We'll cover that a lot deeper in the coming weeks and months, as far as what we did, what we accomplished, a bunch of pictures, a bunch of videos. But today I want to get back kind of into the swing of things with our podcast and cover the markets. So big news last week was Jerome Powell, Federal Reserve Chairman Jerome Powell. They had their meeting at what's called Jackson Hole in Wyoming. And he came out, which he always does, and came out and discussed Fed policy. And the strange thing about what he said it wasn't anything new. Everything that he said, himself and the Federal Reserve governors have been saying for months. Essentially, that they're going to be data dependent. They're going to raise rates until they crush inflation, and that if that were to cause a mild recession, they're okay with that. They've been saying this for weeks, right? Weeks and weeks, and maybe months. But for some reason, the market had this idea that because some of the data that's come in the last couple of weeks has shown that inflation is starting to slow, which is great for all of us in the economy of the market. Inflation is starting to slow. There was this notion in the market that, because that you're starting to see that in the data, the Federal Reserve is now going to either pause, stop, or even cut rates. Where this came from, nobody knows, but that was kind of the thinking of the market. And so over the last since June, the market bottomed basically in June. Like the last 2 months, we've seen a nice upswing in the market. Well, Powell came out on last Friday, and nipped all that in the bud. Right, he came out and said, "Look, they're going to raise rates till they stop inflation." And he said the key words were that it may cause some pain for individuals, families, and businesses. That means is if it were to cause a recession, so be it. Like their mandate right now is to stop inflation. It's not to worry about the economy. It's not to worry about recession. It's to stop inflation. He made it very, very clear that there is no stopping anytime soon. And a new thing he added was that so typically when the Federal Reserve raises rates, it usually sits there for a little while and then they start cutting rates because typically when they raise rates, it causes a recession. Therefore, they have to cut rates. What was new, he said on Friday, was that regardless of a recession happens or not, when they raise rates into the end of this year and maybe early next year, they're going to let rates stay high. Like there is no okay, rates are going to go up, inflation is going to slow, they're going to cut rates. They're saying no, 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 we're going to raise rates, stifle inflation, crush inflation, and then we're going to let them sit at a high interest rate for an undetermined amount of time. That was new, right? The market was not anticipating rates will be raised then remain high for a considerable amount of time. That was new. The market did not like that. As we all saw Friday, the market dropped anywhere from 3 to 4%. Tech stocks were down closer to 4. General market was down closer to 3. So that was new information. But again, what he said generally was not new. But the market didn't really believe him, or didn't believe the Federal Reserve in general. I guess they needed to hear it out of his mouth explicitly, and he let it be known explicitly. Rates are going higher. There is no pause. There is no There is no there is no pausing. There is no them pausing rates anytime soon, and there's definitely no cutting rates next year for the foreseeable future. So all that the market took in. Market was down, like I said, 3 or 4% on Friday. This week, the market is just kind of sloshing over the place, doing nothing. And this is to be expected, right? Because remember, when rates go higher, that's going to slow the economy. It's going to cut back on people borrowing money. Companies now are going to have to commit more of their profits or the cash flows to debt because a lot of these companies have variable interest rates. So as rates rise from the Federal Reserve, their debt rates are going to rise. So there's going to be less money to commit to R&D and to growing sales. They commit some of that money to raising their debt. So overall, the economy is slowing. And what the Fed is doing is going to make it slow even faster going into next year. So this notion that the market had that things are going to be rosy towards the end of the year, not happening for the Federal Reserve's perspective. The market could rise at the end of the year. There's usually that quote unquote Santa Claus rally that happens, may or may not happen this year. I'm actually anticipating that this is going to be a down year for stocks. So stocks will end up lower than they were. The market will end up lower than where it started the year. That's my prediction. Early in the year, I predicted that we'd have a really robust end to the end of the year. But what the Fed is doing and what they communicate definitely on Friday, that's likely not the case. So what do we do, right? For us, IA, Brent, myself, we're staying the course, right? We're buying quality companies that have profits, that have management, that have goods and services that are in demand. We're buying those companies at these discounts. But I will say for myself, I'm not buying at my typical size. So, example, I'm doing about a third. So, for example, say my normal size is say be $1,000 in any one position. I'm only committing about $300 to any one position that I engage in now. Just because again, I have no idea what the market's going to do. Right? It could tank tomorrow. It could tank next year. I have no idea. But I do know that these blue chip companies that I'm buying are at crazy discounts, and so I want to make sure I do have some money. I am committing some money to these companies as the market is depressed. And as we always say, you look at any chart going back to the 1800s, it goes to the bottom left to the upper right. There are instances in the market where the market does go down, right? 2000, the dot-com crash was one. 9/11 was one. The credit crisis, 10, 12 years ago was one. The big crash in 1987 was one. But those were always buying opportunities. And so that's what Brent and I are continuing to do. We're continuing to buy in smaller position size. We're definitely committing money to the market at this time because, again, these are buying opportunities. It sucks right now. I get it. My account is feeling the pain. Brent's account is feeling the pain. I know most of your accounts are feeling the pain. But when you look out 3, 5, and 10 years, we're going to look back at this time and say, I wish I had bought, or I'm glad I bought during that time. So that's where things really stand right now. Going into September, we have another rate hike. There was no rate hike in August because the Fed had no meeting. In September, there will be a rate hike towards the end of the month. There's talk that the rate hike will be another 75 basis points, 0.75%. That's a possibility, especially since we're gonna get the jobs number for August this Friday, in 2 days. So that number is strong again, upwards of 300,000, 400,000, 500,000 jobs. Definitely see. I would predict the Fed will raise by 75 basis points, which is huge. That'll be, I think, 3 in a row. The Fed has raised by 75 basis points, which in the world of Fed raising rates, I think is unheard of. I may have only known once or twice before. So the Fed is serious, right? The Fed is not playing games. Their goal is to get inflation under control. And if the economy takes a hit for it, they're saying so be it. Because their mandate is to stop inflation. It's a bring inflation down. So look for that rate hike next month. But for now, like I said, we're continuing what we're doing. We're buying quality companies at these discounted prices. Dollar cost averaging at least once a month, sometimes more than that per month. But we're taking advantage of buying these blue chip companies at discounted prices. And I hope that you all are taking advantage of this information, of this buying opportunity. Because like I said, it sucks right now to buy in a down market, in a bear market, which we're in. But again, 3, 5 to 10 years out, you're gonna wish you had bought Microsoft at 250. You're gonna wish you'd bought Tesla at around 230, 250 itself. once the market comes back and the economy comes back and things get back to normal. So that's it for this week. Next week, uh, this may happen like this again because Brent will be in Ghana through next week. So I don't know if we maybe do something with him from Ghana or not. If not, then it'll be like this again. Not the greatest of quality, but it's really all about the message. And the following week, we'll be back to normal with our typical podcast. So, as we would say, I owe you two things. What are two stock picks? Um, as we mentioned in the last month or a couple weeks ago, our stock picks will now exclusively be in our membership community. So anyone who is an IA member of the IA membership community, you look for those picks to post tomorrow morning. Anyone who's not a member, if you want to get access to the picks going forward, you can join us at in our membership community and go to ieamembers.com to join. But if not, we'll see you here again next week for more information on these markets. May have an update on our Ghana situation, and just like I said, I hope everyone's taking advantage of this opportunity. Again, 3 5 years from now, you're gonna wish you would purchase a lot of these blue chip companies at these discounted prices. So that's it. I will catch everyone next week.